So thank you so much for joining us on today's webinar. Well, we really wanted to take this opportunity to dig into what's going on in the renewable fuel space. And John has a unique insider perspective into this area. So we wanted to get him on a webinar to share his, see what trends he's seeing, and to talk a little bit more about what's going on in the space, and to also field any questions that you have around it. We have pretty much 15 minutes allocated for John, and then we have another 15 minutes for Q&A. We can run a little bit long if there's a lot of questions. And with that, John, I'm going to pass it over to you.
Great. Thanks a lot, George. And thank you, everybody, for joining us here at the Jacobsen. We're getting a lot of requests with the recent string of announcements of renewable diesel projects to kind of give companies, whether it be new market participants just taking a first look, an overall kind of snapshot of what's taken place across the year. Obviously, 2020 has been quite a year so far. And there's been a lot of significant market moves within this renewable diesel sector. And so what we're going to try to do in the next 15 minutes is do a nice snapshot of what's taken place in 2020. And that will create some opportunities to drill down deeper with the Jacobsen. And so 2020 has been kind of obviously quite an interesting year. And I want to just step back to the beginning of the year and remind that in January, February, we really saw the beginning of a lot of big announcements starting to roll out across the sort of biomass-based diesel world into these renewable diesel announcements. Now, the broader original announcements were more about the rebalancing, I would argue, of big global refiners, Shells, Totals, BPs, talking about that rebalancing sort of, you know, from fossil to renewable, but in more of a general sense. And what we've seen with all of these refiners is obviously these various renewable diesel HVO projects globally. The other piece was that across that January, February, we started to see some of the big funding thresholds get crossed on some of these renewable diesel projects. And we started to see renewable diesel production margins get spotlighted in certain portions of earnings and start to really gain some attention while that ESG and sort of investment trend was starting to really take off. So we had a couple of things happening both on the refiners and within the investment community that was really starting to shine its light on the renewables overall, but specifically within sort of what we look at the Jacobsen here within the biomass-based diesel feedstock worlds and into this now renewable diesel, sustainable aviation fuel, and co-processing demand trend that's taking place. So then we had the COVID pandemic hit, and very quickly we understood unprecedented and to some degree sustained volumetric demand on energy would occur. And in turn, the way in which many of these programs tie into those volumetric energy numbers would inevitably likely affect the biofuels markets and even some of the demands on the feedstocks. We also saw some challenging then conditions on the feedstock markets, things like used cooking oil all of a sudden that wouldn't be as readily available because restaurant closures. Unforeseen things like meat processing plants closing down and massive amounts of animals being converted immediately into tallow products. So surges in certain markets where we might have initially thought the opposite would happen. And then just sort of the overall questions of certainty of programs, I guess I'd describe that, and how, you know, an RFS2 would weather the storm of a kind of pandemic and these other market challenges, and how certain programs, newer ones that were creating major shifts in markets like LCFS would weather it. George, let's pop to the next slide. And then just a little bit of a snapshot on just the overall fuel component of this story, as that's a really important one, is just starting to see initially some of the foresight of how the EIA was thinking about early on what the demand of the petroleum side would look like in reductions, and further pain coming to gasoline, which was already on the west coast of North America, working against low carbon fuel standard and EV regulation coming at it there. So further demand destruction from COVID coming on gasoline, but then less so on diesel, because transportation of goods was still going to be active, and marine and those sectors would still be strong. And now with the most recent updates, we're sort of seeing those original forecasts be fairly accurate. We're seeing that pronounced demand destruction in the Q2 period, but a dig out period moving forward is how all the forecasts are looking. And so that's really important to understand how that has since triggered a lot of what's going on in these wave of announcements, right? As COVID hit, as this significant impact to petroleum refining was on everyone's laps, what that had to force is this massive refinery capacity rationalization with every major refiner globally. And they had to begin to look at their capacity and their platforms increasingly into relation to where demand was. And now that's just volumetric demand now related to this new COVID market, but then layering on the compliance piece. Where is those markets changing to where petroleum diesel is no longer what the market's looking for, renewable diesel is? And so the string of announcements we're seeing is a product of this low carbon trend coming into the COVID and really pushing this refinery capacity rationalization that is going on. And so how are refiners managing this increasing compliance burden and COVID demand disruption? Well, we're seeing it in the announcements. A really great, I think, one to take a look at to understand the process of this right now, I think, is the HollyFrontier board of directors, in which they've just approved 2 of their 5 refineries to be converted to renewable diesel, and a significant capital expenditure towards feedstock upgrading. So I think that serves as a great snapshot of the process of which oil companies are faced with looking at that refinery capacity rationalization idea. And of course, all of the groups on here have active announcements and programs in place and are all moving further in that direction, increasing capacity on the renewable side as they simultaneously begin to step down. So then a little bit about the different movers and how people are coming into the markets. Earlier, but a little bit quieter, we had BP and Shell really coming into the market. And BP and Shell are very long tenured global players, and they are excellent traders with excellent analytics. And so they've really come in and done a lot of work into understanding these markets and have some very, it seems, long-term plays in motion. And up in Washington State at the Jacobsen, we thought that obviously made a lot of sense positioning-wise for BP. But really the important thing to see about these companies, a little less focused in the biomass-based diesel world, is to really note how both exited that California refining market a few years back and are now coming back into that California market, no longer as a petroleum or fossil fuel supplier, but now as a renewable fuel supplier. And it's that 180-degree reorientation in a market that these two are on the front end on, and there's quite a few now following. And that's the trend now to watch. So Valero is kind of the incumbent, way out in front with the Verasun purchases of ethanol plants back in the day, out in front with a very strategic and profitable Diamond Green joint venture. So they are out in front on this low carbon for certain. And they've got core competency built up, a fantastic trade partner, and they continue to work forward in really good projects with obviously a high likelihood of happening. But Marathon and Phillips 66 are coming back, or coming quickly up with big, robust projects of their own that are logical and makes a lot of sense. So this is sort of the trend we expect to see. And we expect probably some more announcements along this same train of strategy and thinking to come. We'll move one more, please. And then there's one more I wanted to touch on, which I think is an interesting one as we sort of look at the causes and conditions and how that market's sort of moving forward towards this increasing demand coming at the feedstock markets. And that's the most recent announcement. And again, it's a story where you look at in hindsight, ExxonMobil making the decision to exit that California refining space, arguably as that LCFS program was coming in. And now 4 years later, as that production comes on in theory and 2 years, coming back, re-entering that California market, having exited as a fossil fuel refiner and coming back into that market now as a renewable fuels supplier. And again, we think that these are sort of the trends we're going to start to see as refiners begin to try to reorient their platforms to these lower carbon markets that are emerging. And so this is a bit of a snapshot here of the recent projects and a bit of a timeline on how we see some volumes coming in. And I believe, George, we have some information on sort of the project monitor that we keep at the Jacobsen, with maybe even a little bit more information on some feedstocks and further out as far as the timeline available on our website. And that's
yes, we do. At the end of this presentation, we'll have a link to that, and you can go on there and monitor that. We're updating that as soon as we get new information. That link will be available at the end of the presentation. I'll also email everybody that link.
Yes, I think we're trying to get a few more things out there to keep folks posted on sort of just keeping track of all the announced projects and the latest that we're seeing on that front. But as you can see, substantial volumes have been adding up. And the questions that are coming is, where's the feedstocks going to come and how is all this going to work? And that is what we're sort of knee deep in working with clients and trying to do our best to explain that story out. But certainly, the most recent announcements like Marathon in California and Phillips 66 suggesting large volume conversion, these type of projects across California are going to mean really exciting things to the feedstock world. And if we could jump one more from there, George, we'll dive in here. So obviously feedstock markets are going to have to adapt quickly. And the first things that will begin to happen is low CI feedstocks will likely move sort of shorter distances, right? And closer in to this new locational demand that's coming to the market. What I wanted to talk about here was just the feedstock demand side of this. So obviously, the first thing we're saying is locational demand's gonna look a little bit different, and that a lot of the ways the flows of not only low CI feedstocks, but virgin veg oils have moved traditionally is about to change. And if I had the map of that list we were just on of the announcements, what you would notice overlaying that to these maps we're looking at right now is that these new refinery conversions and projects are across the western coast of North America. And so you have significant new locational demand coming to these feedstock markets. Primarily, material is going to have to flow in significant volumes to the western side of the country all of a sudden, and not to the traditional locations many of these feedstocks have moved for years. And so that's going to create a lot of new opportunities. And there's also going to be opportunities in quality, blending, and a lot of logistical opportunities coming to the market with this feedstock. Now, one of the things that's important to understand, and we've been talking about, are some of the kind of big levers in play in the feedstock market. And although Tori, our soybean oil and canola analyst, is not baking this fully in yet, the lever of simply how canola oil as a pathway into renewable diesel to get its RINs and all of its credits, which it still is requiring that approval, will have as this demand is coming in is a significant one. So that's a regulatory lever we're watching really closely. And the other thing is going to be some of the feedstocks out there that sort of are available in crude sort of specifications or qualities or grades that will increasingly begin to get upgraded prior to probably arriving at many of these refinery conversions. So those are operations that are going to look a little bit different than what we've traditionally seen in the market from the sort of incumbent, really strong suppliers and producers that exist today, the Nestes and the Diamond Greens, in which a lot of the upgrading of the feedstocks as first market movers, they've been forced to do on their own campuses on the front end of their facilities. So some real changes are coming to the market in that sense, where you have this slightly more integrated model of the initial first movers in the market. Some of these new projects we're expecting to see require slightly more refined feedstocks from the market. And again, it's important to look at sort of locations of how these markets work in relation to this new Western demand and how new infrastructure, and whether it be simply rail, terminaling, storage, blending, is going to be required and sort of repositioned around these market opportunities.
John, if you don't mind, I might want to try to wrap you up here a little bit
Yep,
because
no,
we have a
that's it.
litany of questions coming in for you.
Well, that is about what I had, and I think we missed a couple slides there, and we'll try to put those up on the final deck if we're going to get
Yeah,
that.
we can add them to the deck and share them back out later. So I'm going to put you here on the hot seat for a little bit here.
Sounds good.
How can biomass diesel keep pace with renewable diesel demand coming for feedstock?
So it's really a cost curve analysis is the way you need to think about it, right? So whether ultimately your renewable diesel producer, or biodiesel, it's kind of like the way the LCFS program works. Where do you sit in that cost curve, right? So that ultimate net back for the feedstock molecule comes into play. So certainly programs like California are going to benefit seemingly both renewable diesel and biodiesel. But in the case of renewable diesel, the vast majority of the product goes directly just into the California and to some degree Oregon markets in the US. So that's already very captive. Obviously with biodiesel, it's a slightly different scenario in which you've got molecules with probably weaker netbacks that will sit higher in that cost curve, and those are going to get hit first potentially.
Okay. Do you see any potential shortages of feedstock for renewable diesel plants in the coming years as more plants come online?
You know, I think the feedstock suppliers have been really great and open about just needing some time to work out the logistics, but the volumes are there. And you know, certainly there's a lot of feedstock pools that have a very small percentage presently going into the fuel sector. So we've got plenty of room. You know, how this all sort of balances out in the end. You know, will there be some pinch points on specs and grades and certain products? Inevitably, the market's moving fast, so we'll expect, and we've even seen a little bit that signs of that just recently. But the market is kind of recalibrated quickly. So it seems like the important thing is happening now, in which there's a lot of communication and deals seemingly starting to take place between ag and energy to solve this really quickly. And so it appears to be moving quickly in the right direction.
Okay. What opportunity do you see for midstream companies?
I think there's a ton, a significant amount. Again, I'll point to my statement about the sort of, you know, incumbent, really first-class producers in the market today of Nestle and Diamond Green hold such a high bar. But, you know, a lot of their business has been somewhat vertically integrated, whereas some of these new projects coming are going to rely a lot more on, I would argue mid-market participants. And so whether it be simply logistics from shipping, rail, barges, trucking, to labs, quality control, to pipelines, storage terminals, tanks, it's all coming. And there's new business coming to all of these groups.
Okay. With all the announcements made recently, do you see price pressure on both low CI and virgin veg oil stocks?
I think it's something amongst our team here at the Jacobsen that we're talking about daily. Inevitably, as these projects come, the next step is to understand the timing of these. And we're seeing some shifts in the lower CI feedstocks move quickly, but all in all, we see a market that's quickly working to absorb these demand and new locational demand areas. So we're not anticipating that yet or sharing that in our forecast today.
Okay. Does advanced diesel have better economics than biodiesel even without the LCFS credit?
So we're saying, does renewable diesel, I think, have...
Does advanced diesel was the question, so interpret that as you will.
Yeah, so I'm guessing they're asking renewable diesel or an advanced bucket in the RFS2 there. So I'm going to just guess it's asking is it apples to apples renewable diesel to biodiesel, and so there's
even without the LCFS credit.
Yeah, so there's some differences on, you get a little bit more RIN for the renewable diesel, but you both get the dollar per gallon tax credit. The big difference in the California market is what you get for the strip town gallon value, where you get the full carb diesel value for the renewable diesel, and there's at times pretty significant discount for the biodiesel. So that's where the net back from the two productions differs.
Okay. Can you comment on the impact of this renewable diesel supply and traditional diesel supply decrease on the prices of LCFS credits? How long could it go on when the capacity lump comes through?
Yeah, that's a tricky one to look a couple years down the road into right now. And I'd have to probably defer to Bob Lane on that, who is going to be sort of covering that with some forecasting soon in his writing. So that's a very challenging one. We're working really hard to constantly update and understand some of the outliers in that 2024-25 period and how a couple of those markets are maturing. So I'd say we're working quickly to kind of update our view on that post-COVID, in the sense that new element is factoring in, and we're sort of reevaluating the alternate credit generators in relation to our core competency here in the biomass-based diesel.
And one of the questions I've seen many times before, will there be enough feedstock to satisfy all the new projects that have been announced?
So this is the question we get often. And the story we want to paint is one in which it's an amazing moment for change to come. U.S. Ag has had a long, good run with just soy, wheat, and corn. But at the moment, it's been a really challenging few years for U.S. farmers. And so we're seeing some really positive signs in how the surge of fuel demand is sort of driving that feedstock development. And I can't underscore the fact that ExxonMobil coming back into the refining space in California with a renewable diesel project with camelina as a feedstock, which is, a new cover crop feedstock that is, meant to be positioned at a very low carbon intensity score, because effectively this is a cover crop that's grown in your off season on top of your soy, or even in relation to a canola field. So it's these type of very logical steps that these LCFS programs are going to finally facilitate and bring to market. And we're seeing some cooperatives and groups now working on this camelina, which will potentially fit into a lot of the existing canola infrastructure. So we're just starting to see these very logical things play out in a very positive way. So again, I think that the mixture of this sort of, challenging U.S. farming environment on what has been done, coupled with these new developments that are just really logical next step for U.S. farmers to do. Okay, so we don't have this demand coming from China that we did for this, but we've got all this fuel demand coming, and programs like California and Oregon, British Columbia are going to say we can grow this plant and have a steady demand for it from this program. these are the things that are about to happen.
All right. Why aren't UCO feeds trading at a significant premium to soybean oil? The LCFS incremental value indicates a 5 to 7 per pound premium should be placed on top of UCO.
So, I mean, that's a challenging one to get into at the time we have here. What I'd say is that you look at sort of tallow as what had become the most, I'd say, mature exhibit of renewable diesel coming into this feedstock market. And if you look at UCO, it seems to be the second behind it. So, yeah, we've seen markets move slowly, but yeah, I think that's a great point, and we point to tallow to see what might be happening there.
Okay. In relation to the stability of the product when stored, how long does the feedstock maintain quality versus petroleum diesel?
So I guess the feedstock question is going to be different and specific to each feedstock and very specific to the storage conditions. But as a fuel, it tends to be slightly more resilient or significantly more resilient, and there's stabilizers as well that can help maintain. So that's something I wouldn't want to tackle here. There's great specifics on a couple of the trade associations that do a great job of getting into that. And we can certainly help specifically on the feedstocks, but that's a pretty specialized one.
Okay. Will the renewable diesel demand on the West Coast be met by domestic production or still be relying on renewable diesel imports post-2022? Do you see any concerns in renewable diesel oversupply?
So it's a really big market. You know, you got over 3.5 billion gallons of diesel overall. You know, and yeah, you've got a lot in the pipeline coming at it, but you've also got an Oregon market, British Columbia market. You've got prospective markets now being added almost by the week throughout North America. So that protracted LCFS demand from new markets is there now too.
Okay. Could you provide some color on how you perceive government legislation, RFS2 and CARB, supporting biofuel demand growth?
Well, I mean, I think it was positive to see, you know, there's some language about a low carbon fuel standard type reboot of RFS2 a few weeks ago. And I know there's been some excitement and talk about that. I think for the renewable diesel and biomass-based diesel and biodiesel markets, a program that works on more of, again, I'll bring up that concept of a cost curve than sort of defined targets the way RFS2 does within sort of the D4 and different RIN buckets. That's potentially very positive for renewable diesel, biodiesel, and biomass-based diesel feedstock demand in the sense that for the most part, you have these products and processes being quite efficient and low on the cost curve, significantly lower than, say, ethanol and other embedded products already in the fuel market. And so I think all in all, you'll see it remain nested as a heavy lifter in the next certainly 5-10 years of these programs. Renewable diesel, biodiesel, sustainable aviation eventually, co-processing, strong demand on our feedstocks.
Okay. Do the recent announcements in California of large-scale refinery retrofits to biofuel mean the LCFS market is validated and new entrants should come in, or the credit supply will greatly increase, therefore new entrants should stay away?
Ooh, that's a tricky one. I think what folks are, I think what these announcements, how I'll answer that is I think what these announcements are really telling us that the present market participants see this program as quite bulletproof. And even amidst something as significant as the pandemic we're all living through right now, that this program is meant to stay intact and function, you know, and execute on its plan to transform that California market. And as we're seeing in just the way that distillate or diesel molecule in California has transitioned across the years thus far, it's working. Right. So, yeah, I think it's looked at as in place through 2030 and the new West Coast market driver.
Okay. And John, do you have 5 more minutes to go long? We have so many questions. I don't think we're going to have all of them, but if we can go 5 minutes longer, okay. Do you see a point in time where the size of renewable diesel industry puts material pressure on feedstock prices, UCO, tallow, and edible corn oil? Does that translate to a soybean oil price?
So the big difference between the projects coming at the market versus, for instance, the last 15 to 20 years we've lived through, initially biodiesel, sort of the second chapter with
Uh,
the project size of annual capacity was much smaller. We had 10 million gallon a year biodiesel facilities coming up and taking a piece of DCO or UCO out of a market. Now we're talking very large volume, 400 million gallons of capacity in one location, larger now. So that's the big difference is how the bar has been raised volumetrically significantly. So when these projects start to hit across the coming 2 to 3 years, yes, market shifts are going to take place inevitably, right? But what I guess we were talking about earlier was that we're seeing a lot of that conversation, supplier, buyer, and what was a little bit of seemingly a standoff for a year or so. Deals are getting done, solutions are being worked out, and the transition's taking place.
okay. Do you see brown grease able to help renewable diesel demand, supply renewable diesel demand?
I think the funnel on feedstocks is going to widen significantly. I think, renewable diesel has picked, certain processes of renewable diesel have clearly picked its favorites. We've got new processes coming to kind of market with different flavors of feedstock strategies. And so what I think in general you're going to see is certainly processors trying to widen their optionality on the funnel of feedstocks. And so, yes, more challenging feedstocks like that, lower quality. I think there'll be a lot in that space across the coming years, especially as we really begin to see what exactly that renewable diesel, but sustainable aviation and co-processing specification or grade requirement looks like. And that's an evolving story.
All right. Is the next renewables actually under construction yet? If not, do you think anyone is actually going to spend over billions of dollars to construct a greenfield site given all these refinery brownfield conversions being announced?
Certainly, there's a lot of questions about that being asked right now. We don't have, we're not involved in that project. And so I don't have any real insights. Our understanding was that there was a lot of sort of permitting review going on under there to understand exactly that timeline. And so I think the people involved, as we understand it with that project, are trying to kind of just confirm that timeline to get to market. And I think things right now, if you look at the next couple of years, you've got things like $1 tax credit that's locked in for 2 more, for a period of time more, but then potentially fades off and has a big impact on an ROI calculation for a facility. So that's a big project. That's a site that has been looking for a big renewable project, it feels like, for like 10 years, going back into my biodiesel days. So it seems like there would be a lot of goodwill in that market as well. So it's one we're watching closely and excited to hear, but have not heard anything specific, nor have we heard there's any ground broken there other than probably testing related to permits and the likes.
This one I'm curious to hear an answer on is, how will hemp production and federal and state regulations affect biofuels feedstock markets short-term and long-term? Do you see anything going on there with hemp?
So hemp yields quite a bit of oil, hemp oil, and that is important to understand. That's different than the CBD oil that is very high valued into that other sector. Obviously, Jacobsen, we cover the hemp industry and the CBD side of it. So yes, in theory, what we saw happen is a major first year grow of hemp And unfortunately, the demand not clearly tied to pull that first year growth through. So we're not expecting a similar second year growth at the moment. It's an industry that's in its sort of infancy stage with some big regulatory levers. May sound familiar to some of us in the biofuel space, but I think it's got a lot of longer term potential, provided hemp becomes adopted into things, its biomass into some of the car auto manufacturing and long-term sort of places it appears to be headed. You could see where that similar kind of crush dynamics for hemp could come into play, and that oil could become really commoditized and a piece of the oil complex.
Okay. And this might be more for Bob Lane, but I'm going to throw it to you. You make that decision. How do you forecast LCFS credits playing out in the near-term future, given the additional demand that will be coming online in the next few years?
Yeah, so that's an interesting one, and again, in the sort of COVID market as to how we're analyzing that. We had seen renewable diesel being obviously a strong supplier, but if you look at CARB's forecasts, they're not contemplating what quickly becomes these announced projects volumes that could be coming into California, and so we're that's not a quick answer for us, or so we're rebalancing that right now, and I'd point you to Bob Lane, who kind of is lead and point on that.
Mm-hmm. And you can hit Bob Lane at bob@thejacobsen.com for that, for follow-up on that one.
Yeah.
Last question I'm going to throw at you. How does poultry fat play into the feedstock location dynamics?
So I think all of, you've got poultry, choice white grease, and tallow, and to some degree tallow has been the most popular amongst both biodiesel and renewable diesel, and to some degree that's a more mature crude to refined market, some locational realities, but basically you're going to have to see all of these fats start to rise up a bit, right? If you look at the way California looks at them, they look at poultry, choice white grease, and tallow as animal fats and with the same values. So inevitably, those products will start to get pulled up by quality and potentially pricing.
Okay. Well, John, there's about 8 other questions that we have not got to. I'd like to, after this call, record those and get answers back to everybody on them if you're game for that. Thank you so much for hanging in there a bit longer. To the attendees, we're going to have this recorded. We're going to put it online. We're going to have the presentation set as a PDF for you. And I'll also send out a link for the Renewable Fuels Watch page where we're tracking all these projects. So thank you all for being in here and asking questions of us. And John, thank you for some great insights.
Thanks, everybody. Be safe.